So we're going live again. I'm going to show you a bit more about inflation, how to predict about inflation. I'm going to show you a quick example because we have here the currency Argentinian pesos versus US dollar. We have this currency, the Argentinian peso. It was 3 pesos against 1 US dollar. That was like more than 10 years ago. Now we have this explosion and the black market is even higher. So people will promise you that we help you to protect against inflation. You check Bitcoin is still below last year highs. Sorry, it's still below what it was at the beginning of the year. It's still below there. We warn about that. Lots of YouTubers are showing our formula, the Fibonacci formula. I'm very happy that people are sharing that formula. What's going on with Bitcoin? We warn that Bitcoin is going to get crashed. What's going on with silver? Silver will protect you against inflation. No, sorry. It's still below the price it was 10 years ago. So silver has to protect you against inflation, maybe because this is a bullish pattern, and maybe it will protect you if you buy in the lows. If you bought in the lows, you are safe. If you bought around here, if you bought in 2011, you are destroyed and you are still losing 10 years later. So what is the real way that really protected me against inflation? I will tell you the strategy, the concept, and will take you no more than 10 minutes, and that's it. The transmission will be out. So I promise that will be a very fast video because a lot of people talk about inflation. Inflation here is 40%. It was 30. First it was 10, then 15, then jumped to 20, 30 for years. Now it's 40%, and maybe we end the year 60% here in Argentina. COVID crisis helped and forced central banks to print a lot of money, but check what? Gold is still below the price it was 10 years ago. Gold is still below the price it was 10 years ago. So gold is not really protecting you against inflation. Maybe it will. I'm not saying gold will not be a good hedge, but so far gold is still below the prices it was in 2011, and it's right here, almost around more than $100 below its record high in 2011. So I'm going to show you the real Argentinian way that really helped me. You know, I am a risk guy, I have a team, I work at a big bank in Argentina, and I warn you in advance about the Bitcoin high. You can check all the videos, and now the Fibonacci formula is going viral. I'm very happy with that. I forced it to be viral on Twitter, and I'm going to show you how I really hedge myself against inflation. As a bank employee, I got a loan that was 225,000 US pesos, Argentinian pesos, at a currency exchange rate of 3 pesos, 3.8 pesos per dollar. And that was, if you check the number, that was a mortgage rate. It was a mortgage loan I got for that price. And the amount of my debt was 60k US dollars, 60,000 US dollars. So this was my mortgage loan, and I got a 7% fixed rate, 7% fixed. Remember this word, fixed rate. A fixed rate, and it was in pesos, Argentinian pesos, USD, RRSS. So my loan started to go, getting destroyed. And let's go back. This was my installment, was around 600 US dollars. I'm still paying it. Check what happened in 2011. Now my last installment, if I go for this amount, almost 2k pesos, I divide by the real black market exchange rate, I paid 10 US dollars, $600. 10 years later, I have and now I pay my mortgage loan installment last month is 10 US dollars, 10 US dollars, and I'm still living in the same apartment. This is I'm still living in Buenos Aires, but the debt was destroyed. So if you want a real hedge against inflation, you buy leverage, not with your money, but with a long-term loan for a real asset and on with a fixed rate. And if you expect the fixed rates will be below the inflation levels in the future, that's the real hedge against inflation. And you do this with other people money, long-term rate, long-term loan for a real asset with a fixed rate, and you expect the fixed rate that will be very low the level of inflation. So my fixed rate was 7%, and inflation at that moment was above that number. It was 10, 15. I was expecting the government to destroy the currency, and it happened quickly, and I got a free apartment thanks to inflation. And you should do the same. If you expect a complete crash in your currency, you get a fixed loan, you get a fixed rate, and you have to buy a cheap asset in a precise moment, and you have to buy it not in the high. You have to buy an asset in near its mean price, otherwise the strategy won't work. So I'm saying that the real strategy is getting long-term fixed rates, long-term fixed rate loans. This is the point now. So now I'm paying $10 for my mortgage, and I could cancel it anytime, but I am allowing it because I expect the currency to continue its destruction. Check COVID charts. COVID charts are saying COVID is under control, the death levels are under control, but the Delta variant is here, is everywhere, and you are starting to see an a never increasing movement in the charts, in the active cases chart, in especially the Commonwealth charts, UK, South Africa, Australia, and maybe this will mean that all the vaccination levels are not enough to contain a third wave, and a third wave that should have increased much lower death rate levels, much lower. So far this is a case. Let's see what happens next. And the first data is pointing that the vaccinated are the majority of people dying in the UK, 60%. So if a COVID crisis continues, expect what? More printing. Kiyosaki says go for gold, go for silver, go for Bitcoin. Well, that's a good idea, but what is a better idea is to get a fixed rate, long-term loan, and change that for an asset that you expect a higher appreciation rate than the fixed rate loan and fixed rate. That's the key point. That's the real thing that helped me. And with other people's money, you don't put your money. So you have to be careful, because if you are going to lose your job, you lose everything. If you're going, you have to be able to handle the installments. And the other thing, remember, leverage, long-term loan for a real asset with a fixed rate, and I'm adding a new feature to our strategy. For a fixed rate, sorry, I have issues here. For a fixed rate, with a fixed rate, and with income, with passive income above that. If you can protect this strategy with passive income, you will have a free hedge very soon. Remember, this is a 10-minute video update, and this is the real strategy. If you can add to this strategy passive income, that means rent. This could be maybe it's a partial rent that covers partially your installment. This is a real way to protect you against inflation. Check what happened in United States. Check what happened in United States. This is, you see, this is the price of the $1 in Argentina. Well, the curve, this is the official market. The black market rate is almost the double here. It's 150. You won't see the black market. Have you checked what is going on in the United States? Investment funds are on a rush doing this strategy in the United States. They're taking all the properties, and the real estate market in the United States is still high. I'm checking for the news. Blackstone, the big guys do this strategy. The big guys. Is it a good time? You better check the levels of the real estate prices. You may be interested, and you have to check if the market is hot right now. I want to find the how property markets are a real investment, a real inflation risk. Okay, the Federal Reserve is saying that they are going to control the inflation, but the risk is that they pressure too much the interest rate. They may continue to decrease the inflation expectations, and they may or may deaccelerate the recovery, and that is something that they don't want to risk. The Federal Reserve, the consensus is that the Federal Reserve will allow some inflation in the system to protect the recovery. This is the consensus now. And nobody is believing that the Fed will crash inflation fast and they will crash the recovery, because all is indicating that we may have a third wave, a variant wave, so the Federal Reserve will be behind the curve, following inflation and allowing inflation in the system. Is it temporary? Well, I don't think so, because we saw big guys moving money in the real estate market, because this is the Argentinian way to protect yourself again. And the hot property market, is the market really hot? No, I don't call it out, sorry. It's not, I will find the article. And I have other things to explain, but this is the real perfect way. Long-term rates, fixed rates, in a currency that will get self-destroyed, and passive income, a rent above that. This is the only real smart way. So you have wave seal is on fire. Yes, of course on fire. Because why is on fire real estate? Because you have a long investment, have more leverage, and you exchange for a secure assets. You exchange it for collateral, you exchange for tangible asset like real estate. So this is it. I don't have more to say, but this is the real way, the Argentinian one, that helped me against inflation. Even though I saw higher inflation numbers and levels, I was smiling. Because what? Because my loan installment went from $500 to now $10. And now I'm happy because I have destroyed the debt, and the debt is my friend. As Kiyosaki would say, you have good debt and bad debt. Good debt makes you rich, and bad debt makes you poor. Bad debt is when you use that debt to spend in stupid stuff, very expensive vacations, clothes, and you use good debt to get your leverage for a fixed rate in a currency that will get destroyed. Will US dollar will get destroyed when you have Russia, we have geopolitical increase in Taiwan, China declaring that Taiwan is theirs, Really recently, you have UK and Russia fighting for Crimea or making pressure down there. You have Biden spending money. You have federal debt out of control in a vertical move, like in Argentina, and you have Biden spending more money and faster and faster. Time is running. The Federal Reserve removed almost 1 trillion US dollars from the market using reverse repo. That is removing money from the system, and gold is still very quiet in the highs, but not in the record highs. So they kept the crypto markets very quiet lately, and we have a warning that they were going to have a deleverage, and it happened as I promised. We warned about lumber record high prices in advance. We warned about the Bitcoin high coming 20 days in advance with the Fibonacci formula, and the silver price record high of 2021 in advance with a live transmission. All it was explained in the live transmissions. So I want to show you that this is my preferred way to protect you against inflation. What is the most important asset that will move first in an inflation? Food prices. Food prices will be the asset, the prices that will move fast. What is the second risk you should consider? Government intervention. What will happen with the gold prices if inflation hits the market? They will try to sell gold, but other assets will escape from market intervention or government intervention. So you have to be very careful and understand that some markets will be intervened and food prices will be intervened, but since the market is more distributed around the world from a geopolitical point of view, food prices are more a free market than the gold market. So you have to find we will talk about that later. I want you to remember this from Argentinian guy. Leverage long term for a real asset, fixed rate, with other people's money, with passive income. And you hedge. And if you can make that and fix, and you have a zero net flow, no negative net flow on a monthly basis, you're done. That's it. If you can match your passive income, your rent, with the cost of your installment, that's magic. You are covered, and that's it. This is the real Argentinian way I present you to protect yourself against inflation. Sorry, it's not gold, it's not silver, it's not Bitcoin. This is the way. Hope you find a strategy. Don't buy expensive asset very far away the price of the market, and very far away from the mean pricing from the long-term charts. You can find that the strategy, and you play safe in safe real market in the safe real market level, not a very expensive from historical point of view. You are covered just like me. Hope you enjoy inflation, because inflation is good, it's a blessing if you see it coming first. Hope you enjoy this update, and see you soon. Please share this video, please subscribe, and goodbye.